Hi, my name's Sam Saggers, Director of Positive Real Estate. 2013 is going to be an explosive year in the real estate market. There are so many different elements converging on the market at one time. It is certainly going to lead us into a great year for investors. After 20 years of working in the real estate market, I can tell you things are always changing. It's not always a great principle to invest in your own backyard or invest in a marketplace where you feel comfortable. So we're going to have to understand where we should be investing. It's a really paramount principle of anyone thinking of getting into the real estate market. I'm going to tell you right now, from a macro level, there are some great places to invest in Australia. There are also some pretty ordinary marketplaces where, if you got into those markets, you might just get into a little bit of trouble. So let's explore the best marketplaces around Australia on where we should be investing into 2013. What's been conclusive in the real estate market is that Darwin and Perth have led house prices. They've certainly surged. In my opinion, the Darwin market has gone so well, it's probably not a marketplace where you want to invest. You've missed the boat. But there's three marketplaces that are showing a positive outcome. As you can see, they're Sydney, Brisbane and Perth. For me, these are the great macro markets where you should be investing in 2013. As for the other marketplaces, we can see Adelaide, Melbourne, Hobart, they're all declining markets. They're going down in value, so be wary, don't put your money there. RP Data's got some great information on what's really been trending around Australia. If we look at the graph behind me, you can see that Australian property market as a whole has really bottomed out. In fact, over 2012, 2011, 2012, you can see really the bottom of the market. And now we're getting into a positive trend, which is great science. Let's look at the facts. Interest rates potentially are even coming down lower than where they are, which is an historic low right now. Construction prices are at an all-time low, and there's still a massive shortage compared to the huge population demand in Australia. One of the telltale signs for me right now is this ANZ Bank slide. It's such a great slide. It's my most favourite piece of information right now in the marketplaces. What it's actually saying is right now, Australians own more than ever before of their own net wealth. In fact, it hasn't been this good since the late 80s. So right now, people have equity in their homes, people have more cash in their pockets. Right now, the market is really prime. Let's think about that. We've got low interest rates, we've got fairly affordable houses if we know where to look, and right now we've got equity. In real estate, we call that an equitable market. And right now, Australia, or much of it, is doing pretty well. Of course, not everywhere is a suitable investment spot. And one principle that we always look at in real estate is a little thing called supply versus demand. We look for shortages of where things aren't getting developed or where property isn't getting developed. And right now around Australia, as you can see, the big three, Brisbane, Perth and Sydney, there's a real shortage of supply. In fact, New South Wales as a whole is actually at its lowest point ever. There just isn't enough dwellings. And we're seeing that in the rental returns. Rents are really starting to spike and grow in these particular areas. But you'll also notice on your screen that the Victorian marketplace has come back. In fact, there's an oversupply of property. And if we looked at the rental returns right now across Victoria and Melbourne, they'd be much lower than the comparable capital cities, which are faring much better and are better hotspots into the future. According to RP Data, rents are on the rise. And in fact, rents are probably outdoing a stagnant or flat property market. But that's a good thing, because when rents stop growing, eventually the real estate market or house values will increase. There's an old saying, after expansion comes contraction, and after contraction comes expansion. And we're seeing an expansion in the rental market, particularly in those areas that I've mentioned, your Western Australians, Queensland or New South Wales. So guys, you've got to get into those marketplaces, because that's where you're going to buy a property and quite soon after purchasing it, you're going to get a rent increase. We all like those, don't we? Of course, the telltale sign of what's happening in the market is always auction clearance rates, days on the market and discount. Certainly over the last couple of years, as we've bottomed out over the marketplace, there's been low sentiment. But things are changing, people are interested in property again. And that's a great news for investors, because if you own property or are looking to get into the market, the market often gets driven by sales volumes. We're seeing vendors hold on to properties now. We're seeing a shortage of supply. There's more demand than ever before. Things are changing. Days on the market are certainly speeding up, and discounts in the market are drying up. What does that mean for you as an investor? Well, I think you're going to do pretty well as all those people come into the market. As interest rates get lower, things are going to certainly do really well into 2013. This is the year you want to be involved in real estate. Don't miss this one. It's got to be action-packed, I can tell you. But for more information and some great content, I'd encourage you to come along to one of our property information nights. They're held all around the country. There's some great details to certainly take down, so bring your notepads. I look forward to you catching up with you at one of the many events that Positive Real Estate hold all around the country. So register your details. Catch you soon.